Hello, my Teaserking family. How is everybody today? I am just dandy. Um, Gold is over 2,900 again, as we've figured. I put my phone in my pocket, and then it's all gets a little blurry. Just a second. All right, so we can see gold's actually 2906. So it jumped way up from 28.85. And then, of course, at 10 o'clock, the US started their little derivatives. Well, actually, it started at about 8:30, which is London in the US. Not doing much at 10 o'clock. It's not going down too much. But everybody knows at 10 o'clock they do it. So again, you see 2906. Silver still sitting there. It's meaningless. Yes, there's a shortage. Yes, there's huge demand, but it's not priced by that. It's priced by the derivatives, JP Morgan. And I don't know how much Goldman Sachs has into it, but basically they're suppressing the price, as we know, which is bullshit. But it gives us a buying opportunity because we know this price is nowhere close to reality. This price is not close to reality either. That's why we keep buying, because we know it. And that's why when it goes down, it's just a joke. It's just because of that. So not too bad. 29. Oh, we're back to 29. So I know people get scared when it's 29.20, and then all of a sudden it goes down to 28.50, and you're like, oh shit, is it going to keep going? Which is a natural reaction. But if you understand, then it goes down. Now they're going to do call options to get, to bet the price going up. When they do that, they're going to do that because that's the nature of the game. It's all options. So anyway, that's what we have. Sharon Weiss, I do have. You can pay me tips if you want. It's on here on the bottom here. It says dollars. It says show your support for the Teaserking. There you go. 2908. So that's what's going on in the stock market. Let's see. So let's take a broader look. Let's look at crypto, and we'll look at Bitcoin, and it is at 82.9. So it's went down to 81, went back to 85. Yesterday I saw Jim, and now it's 82. How comfortable are you in Bitcoin? Gold, we understand. Right? Gold, we know, is manipulated. You don't know Bitcoin's manipulated, but it is. It's manipulated by that Sailor guy and Larry Fink, two guys you don't want to be with. So that's what it is. So you sit there and you and So what are stocks doing? Stocks started collapsing yesterday. They were down, went from 44,000. They were down another 900 to 42,000. Let's see. Excuse me. I got to put Google in a different spot because I get it caught. Yeah, here it is. Stocks today. No, wait, this is 10 minutes ago. Dow dropped 700 points. Nasdaq flirts with correction territory as Trump's trade war escalates. U.S. stocks saw losses mount on Tuesday. Dow dropped 7. Yeah, but what is it today? I hate that. I don't want to know. I already know what happened yesterday, but I want to know is what's it doing at 11 o'clock on the 4th. Tuesday's no dive. Well, today's Tuesday. All right, we're going to talk about tariffs today because people don't understand them. So, stock market today. Stocks deep in their sell-off with fresh tariffs and what the fuck is it at? Why is it so hard to get what the stock's doing? It starts me with S&P. Okay, the Dow's down. As of now, it's down 700 points, but that doesn't. Oh, so it was 40. I thought it was 42,000 yesterday. So it's down 700 at 172, 171%, down to 42,453, which makes no sense because I thought I saw it at 42 yesterday. So I don't know. U.S. action is off on Tuesday. Yeah, 42,453. Okay, so I guess this is live. It's down 700 points. Now, considering the prices aren't real, I don't know what that means. 42,000 is not real. Probably should be 20. So let's talk retirement. And then we can get into tariffs. So you've got 500,000 in a 401k. Tariffs are placed. Stock market tanks because that means costs go up. You have massive inflation. People think it's 2%. How convenient that they lie about that inflation's even part has anything to do with cost. Then they lie about the cost, going, oh, inflation's only gone up 2%. Now, if you're collecting Social Security or some of these other things the government hands out, which is a joke because you paid in 10% and you get 2% back. So with that said, you they say, oh, it's only 2%, it's only 3%. So you think the markets are fine. So you make misleading things. This reminds me of Madoff. And if you watch the Madoff thing on Netflix, the SEC has a chance to nail them and they let them go because they're in on it and they're getting paid to shut up, which is exactly what they did, probably from the Russian mafia or JP Morgan. Probably he controls a lot. He was in on the Ponzi scheme, so probably he paid off the SEC to keep quiet. So the SEC audits Madoff and say, yeah, everything's fine, it's legit. And then more people get in thinking it's legit because the SEC is lying through their teeth, and more people lose their money. But nobody at the SEC went to jail or JP Morgan for fucking lying through their ass. This is why you can't trust anybody. You trust your government. Good luck with that. So the market, if costs go up, your company's going to earn less because it costs them more to make whatever goods or services. And therefore, if their costs go up, their earnings go down. Here goes the stock market. So you've got 500K in a 401k, 500,000 in a 401k, and you're trying to, now what do you do? At what point do you start to panic? As I talked about retirement yesterday, the game changes because you don't get a paycheck. So you're used to a paycheck for 40, 50 years, and now you're not getting a paycheck, but you got your bills haven't gone away. Even if you own a house, you still owe property taxes. You still got to pay utilities, maintenance, get the grass mowed, paint the house, refinish the deck. So there's a lot of other costs that go into a house besides just paying the mortgage. In an apartment, I just pay my rent. So at what point do you start sweating with your 401k? Oh, it'll come back. It came back in 2008. Well, when it hits 250,000, how confident are you? You've just lost half your retirement. Now, how confident are you? When do you start sweating? Well, there goes that vacation I can't do, but I guess I'll work another couple of years. And that's really the problem with it is, right? So if you then take your 401k out of stocks because they're only going to go down because the massive inflation is it's not measured in percent, but it's much higher than 2 or 3%. It's 50, 60% or 100%. Coke went from $1.59 to $3. I call that 100% tariff, and it hasn't come back. So it's still 100% or inflation. Even though it happened a few years ago, it still happened and it hasn't been reversed. So basically, the Coke went from $1.50 to $3, we'll round it, and it never came back. So it's 100%. So you've had 100% inflation. Means the value of your money went to shit. That's why, as I showed you the grocery cart, there's 4 items in your grocery cart for $20 now, and in the late 70s, you could fill your cart with $20. So this is the problem. They keep ruining the money because they're Keynesians. They don't know any. They think they can just keep printing money, and they go, "Oh, I'll just print more money." Well, everything's more expensive at the grocery. Well, we'll just print more money and pay for it. And they don't realize is they kill the money, and the money's worthless because these idiots want to keep printing the money. Like going for it on 4th down. You go for it on 4th down. It's good if you make it, but there really isn't a reward if you do it at midfield. It's actually not a reward because if you do it at midfield and you do get it, you're still at the midfield. Uh, and if you don't make it at midfield, the other team gets the ball at midfield, and then, two first downs and they got to score, and you're demoralized because you basically turn the ball over. And then what happens, right? So that's kind of what's happening with the inflation. It's You're not realizing the effect of money printing, right? If you keep printing the money becomes worthless. And what good is? And you saw the grocery cart; it's empty. $100 used to fill it up, and $20 would fill it up. Now, let's put it this way: at $20 used to fill it up. I'm not sure that 100 would fill it up. Let's say you need 200. That's probably the best example to show you what inflation is. It only took 20 to fill the cart late 70s, and now 200 to fill up the cart in 2025. That's inflation. That's so you got 500,000 in your 401k, but it's monopoly money, so it's really not worth much. And so that's the hidden part of it. So if you go buy gold and silver, oh, gold doesn't do anything. Yeah, because it's freaking it doesn't do anything because it's inflated, and it's or no, I'm sorry, we're talking gold. Gold and silver don't do much because COMEX is repressing them with derivatives. It's not free market. It's not the market dictating the price. So gold and silver should be much, much higher. And oh well, how is it going to break? Well, BRICS is breaking it with all the gold Russia, China, and India and Saudi Arabia are buying. That adds demand, which adds price. And so we know they're worth a lot more, even though silver says $30, we know it's worth a lot more than $30. And we know $30 isn't worth as much. So we know that $30 is at least probably, I would say, $1,000 for silver, if free market. I'm trying to find out the supply and demand, or the total silver. And we know there's 200,000 tons of gold, but it looks like there's 1,000,000 tons of silver, which I don't think there's that many. I thought I looked at it, it was 500,000 tons. So I'm not sure where they're getting it. I think they're double counting a lot, or I don't know what they're really using, but there's no way there's 1,000,000, like I think it was 1,000,004 tons of silver. That's not accurate. That's double counting. Anyway, so we know the prices are much higher, which is part of the Ponzi scheme, is to keep the prices low so you don't venture into gold and silver, because we want you in the stock market, because Wall Street runs the country and the banks run it. JP Morgan and Goldman and those guys, Larry Fink, they run the country. They make the laws, they make the rules. That's why they're not all arrested. They won't arrest themselves. And so therefore, this is the problem. So you think, oh, well, that's not going anywhere. Well, BRICS is changing that game. So now, do you want 500,000 in your 401k, or do you want take the 500,000, maybe leave 50,000, although it won't be worth anything, and then buy 450,000 of gold and silver? And what the gold and silver, the difference is, as you get older and you go to take the money, it's worth more because it's gold and silver. So now the 450,000 that you basically exchanged, it didn't cost you anything. So you have $450,000 and you go buy 450,000 in gold. Bottom line hasn't changed. You still have 450,000. Only you've changed the vehicle of paper inflated money for real money, gold and silver that can't be inflated, can't be printed. You haven't lost any, you haven't spent a nickel. You've just bought, you've taken the 401k and bought gold and silver with it. And the kicker is this is going up. The gold and silver, you'll be 600,000-700,000. And the that'll be worth more. While if you hold on to the paper, it'll be worth less, because that's what inflation does. It kills the value. That's what the grocery cart shows you. So in the 70s, it was 20,000, and now it's nothing. Uh, that's what it shows you is the value of your asset goes or your money goes down in inflated dollars. So here the stock market's down 766, um, which is current. So it's at 42,424. That's a full house, three fours and a pair of twos. So as that goes down, how comfortable are you with? But gold doesn't go. When gold went down the other day, it was bullshit derivatives that knocked it down. Nobody sold any gold to knock it down. And now it's right back into the 29.05, 29.10 range, even though it went down to 24.80. Is the stock market going to go from 44 to 42 and back to 44? Not a chance. It might, but it won't be real. It'll be dollars printed by the Fed. So it's not a real game either. And what is your stock doing? What is your 401k doing? Is it still worth 500k? My guess is no. So at what point do you play the game? How far? I guarantee your 401k drops. How far is it going to drop? 500 to 4 to 3 to 2, eventually to 0. And how's your panic level? At 400,000, how comfortable are you that it's not going to 3? How comfortable are you there's no value in it, even though it says 400,000? How long can you keep watching it drop? Gold and silver, you don't have that worry, because even if it does drop, it's derivatives, not free market. And our key is BRICS, Russia, China buying all that gold out. So anytime there's demand and a limited supply, and we know there's 200,000 tons is very limited in gold and silver, and it's already gone. There is really nothing left. Just when somebody comes into my store, my gold store, and sells, and then I can buy. But otherwise, he doesn't have any gold. He's got a little bit of silver, but even that's drying up. He didn't have as many bullion ounces. He had more bars and stuff. So that's what you're looking at. That's the key. So that's what you need to understand. So how safe is your 500k 401k as the market's dropping to 42,000? How far down does it go? And at what point, if the market goes to 35,000, how comfortable are you going to be in it? And why aren't you turning into gold and silver? You're just going to watch it go to 0? Are you going to keep betting red when black keeps coming up? That's what you're doing, right? You're betting red. It's hitting. Now it goes to black. And now your $500,000 401k goes. Now what are you doing? How comfortable are you? How comfortable are you going, keep betting red when you should be betting black now? So you should be in gold and silver, but you're still staying in stocks or real estate trust, as nobody's going to be able to afford paying their house payments, their mortgages. The stocks, no good. The bonds, no good. Money in the bank is losing value because the inflation is much higher than 2%. So again, you want to trust your government. Fort Knox, apparently there is no gold, which we told you about a long time ago. There was no gold in Fort Knox because they sold it to the Chinese. Then they're saying somebody stole it. Oh, really? This is the best you can come up with? Somebody went into Fort Knox and stole the gold from Fort Knox. Really? They just walked in like the professor and they stole the gold. They shrunk it into little pebbles and threw a tube, blew it away with water into a storage pipe, and then they melted it back into bricks, and then it's in a little house in Portugal. I mean, is that what we were supposed to believe? The professor was there, and the whole gang was in Fort Knox stealing the gold. Oh, okay. So Nobody stole it. It just simply was. It was simply sold. Now Trump with his Bitcoin crap, it's not real, and he's got 4 or 5 other Ponzi scheme coins that are probably they're we know they're not real. I don't know how anything you could say digital is real. Digital Canadian Club is this. Let's do this digitally. How would you drink Canadian Club if it was digital? How would you have a Montana Rookie if it was digital? Oh, I did want to show you this. So I was going through eBay yesterday, and as I told you, this is a refractor, so it's worth more. So I showed you, I think this was worth $9,000 without the refractor, and I said the refractor is worth a lot more. I saw, I believe, a PSA 8 or a PSA 9 was 28,000 for the refractor, so it's worth at least 4 times, and that was an 8, I believe. Let me see if I can find it. But I'm trying to show you. I'm going to educate you on eBay and cards also. So here's the Bowman Chrome I showed you, 77.50, and it sold. And let's see. And the problem is it already sold, so it wasn't. I couldn't put it to my favorites. I'm not seeing the refractor. But it was like a PSA 8. I don't know. Give me a second. Hey, Prophet. Good morning. Just a sec. So I see the regular 77, and these are for 9s. Where the hell is it? I saw it last night. Hmm. Anyway, I'll probably find it 5 minutes after class. Go, oh, there it was. Anyway, it was 28,000 for the uh for the card I got to refract, and it was like a PSA 8. I don't know where it is, but anyway, did want to show you that. So again, I lost track of what I was bringing it up for, but again, the gold and silver cannot be printed. It can only go up if there's strong demand, which there is with bricks. So bricks is the game changer. So at how long will you go and watch the market drop? The market's dropping because, so let's go back to Titanic. We always go back to Titanic, right? If A happens, B happens, C happens. If the boat hits an iceberg, the water comes in, the boat sinks, you need a lifeboat. Makes perfect sense. If Trump does tariffs, costs go up, stocks fall because their prices, their costs are higher, but that doesn't mean they can raise prices. And then the stock drops because the earnings are down. And the stocks market does not like bad earnings. And so that leads you to gold, where gold goes up because supply is low and the demand's high, and therefore the price should go up. And as people start leaving the stock market to go to safe haven because they don't want to see their $500,000 401k, which they need for retirement, go to zero, or even go to 250,000. You know, oh my God, I can live on 500 grand, but I don't know 250, especially with inflation not going down because it can't. Once you printed the money, you printed the money. It's out there, and you got a $36 trillion debt, or $37 trillion now. So at what point do you start putting two and two together, going, the only thing that's going to save me is gold and silver because it's not dependent on the dollar. If the dollar crashes, gold goes higher. So at what point do you start getting stressed that your thing? And as I'm telling you, as your stock goes down, as you're not getting a paycheck, how do you pay your bills? Well, I'll take the money out of my four. I mean, that's the problem with retirement. It's really hard to retire and go from paychecks to no paychecks. Even and I doubt you have pensions anymore. So you got your 401k, which you got to pay tax on it as soon as you pull it out. And you got to pay tax on it, which gives you less money. And then you pull it out, and then you use it for your expense. Social Security, you can use to pay rent, maybe. If you're living in a $500,000 house and you got a $4,000 or $5,000 mortgage, you can't use Social Security for that. So how do you pay your bills when you retire? Oh, well, I have money in the bank. As the money loses value, you're fucked. And so if you got, I got a 401k, again, you're fucked. You think you have 500,000 or $1 million that you have, but you don't. But it doesn't. As I showed you with the grocery shop, I'll show you again. As I show you with this, right? So it used to fill your basket with $20. Then it's kind of filling your basket, and now there's very few. There's 5 things in it. That's where you're at. So your $500,000 that you think you have will do this, will only do this. This is the 90s. That's what inflation is. So that's where you're really screwed. Is your 500,000 is not going to fill your cart. So it went from $20 to fill the cart, or maybe it's $300 to fill your cart. And as you start using your money, you don't get it back. Well, I'll get dividends. Yeah, but if the stock drops 50 points, then what happens? So all of a sudden, these big Apple Amazon I saw got crushed, Tesla got crushed, Nvidia got crushed. They're all getting crushed because they're not real and they don't give you the they're not making the money that they're saying they're making, especially Tesla. If you trust Elon Musk, you're an idiot. He's as dumb as Warren Buffett. So Warren Buffett's sitting there, and I was on LinkedIn, and he said something about tariffs. Guy's clueless. Well, it's like a tax. No. All right. So let's get into tariffs. What is a tariff? It is a fee to, if you want to ship goods into the US, we're going to charge you a fee, a tariff. It's not really a tax, but it's a fee. And it's going to be 20% of the amount. So if you ship lumber in here and it's $100,000, we're adding 20%, $20,000 to your order. No, we don't pay that. Wherever it comes from pays it. So if it's coming from Canada, Canada has to pay that extra 20,000. Not us. We're the ones receiving the tariff. We don't pay. We're tariffing you. Mexico and Canada and China are the ones that have to pay. So you say, well, that's going to be extra cost. Why would it be? Now, if they charge us for the tariff, so in other words, they're shipping lumber to the housing so they can build houses, and it's $1 million, and they add, or let's say 100,000, they add 20,000 to it. So can they make the lumber company pay it? No, it's not theirs. Do they make the 100,000, 120? Well, no, because that will pay it. So the people selling the lumber from Canada have to pay the tariff, not the US. Well, it'll raise prices. It won't raise prices. It'll raise costs depending on how they work it. So they might say, hey, we got the tariff, but we're going to, can you pick up our tariff? Maybe they'll say yes, maybe they'll say no. But if they say no, the one that bears the cost is the one shipping it in, Canada, Mexico, and China. Now, Canada, China, and Mexico might say, well, then fuck you. As you try to sell your products, we're going to charge you a 20% tariff. This is why you need free trade. And it's the only thing that works is free trade. Will tariffs eliminate income taxes? I don't know, but income taxes are totally illegal. Until 1914, there was no income tax. We're on the gold standard, no income tax, and geez, look how the country grew. No major wars. Okay, we had the Revolutionary War to become a country, and the Civil War, where the North and South wanted to charge. The North wanted to charge tariffs on England, and the South, who made the cotton, didn't want to charge them. So you can see the problem with that. So there is no income tax. All of a sudden, we get an income tax thrown at us and a central bank, both illegal, not in the Constitution. I thought we're supposed to follow the Constitution, but nobody says anything. Then what's the point of the Constitution if we're not going to follow it? This leads to a World War I. This leads to a Great Depression. This leads to World War II. This leads to Vietnam War, Korean War, getting off of gold. This whole thing of, well, the government has to print. Where did this come from? Obviously, in the 1800s, we weren't like this. We had gold. Why did we get off of gold? Why did government get big? Why did they throw in a central bank? That was J.P. Morgan's doing because he wanted a monopoly. And this way, his bank was having difficulties. He could restore it with the Federal Reserve, which he runs. He's the one that prints the money. So it becomes, as they would say, a freaking nightmare. So I read on a LinkedIn article, we'll be paying more for stuff we get from Canada. I don't know what it was. It went from $50 to $62 because he's adding in the 20%. I go, that's not how it works. So a tariff is an extra cost, as if we go to Target and buy something and there's a tax on it. It's $20 we pay in Michigan, 6% sales tax. That's a tax. You buy something, 6%. It's bullshit, but what can you do? And it's added to the cost. So it doesn't cost you 20, it costs you 21.20. So there's that extra dollar that or $1.20 that you pay when you buy something, which is bullshit. So then you get to tariffs. Well, it's not gonna again, the market controls the price. So if the tariff, it's not going to raise the cost of the lumber company, of the importer from the US. It only is going to be the exporter from Canada or Mexico or China. Whoever sends it in is going to get this extra bill at the register. You owe us an extra 10 or 20%, whatever it is, based on whatever good it is. I don't think it's for every good, and certainly not for gold and silver. Profit. Tesla is going out of business. Sales are very down. Well, why are this? But this is what I told you. You're building a you're building a car nobody wants. That's what a malinvestment is, and that's why you listen to Say's Law. You make what people want, not what people don't want, and then wonder why they don't want it. Nobody wants an electric car. So why are you building them? Why don't you try building a regular car? So if Tesla goes out of business, all these idiots that bought Teslas, how are they going to get them fixed? When the battery runs out, they're fucked. So they just spent 70, 80 grand on a car that they'll never be able to fix, repair. When the battery goes, when the tires are different because they're heavier. So I'm glad about that. But I talked about it before. I said I would dump my stock when it was 2 something. So I would assume the stock's getting crushed. But again, that's the thing with Tesla. That's the thing with any product in the market that nobody wants. Well, we'll try to get the public to buy it. Yeah, but if the public doesn't want it, you're fucked. And that gets back to tariffs. So, okay, Canada sends in lumber so we can build houses. Now, the cost is to Canada, not to us. So I'm not quite sure where people think prices will go up. They're gonna, even if they raise the price to us, they still have the tariff, and then we can say, no, it's too expensive. We'll buy it from another place, another country. Other people have trees. Or we can say, okay, we'll buy it. But if you do, you can't just, well, I'll mark up my price 20%. It doesn't work. That's why Coca-Cola is still sitting at $2.90 and not $5, because you can't, even then it's buy one, get one free. It's, I was at the grocery store Sunday and I'm noticing, as a good little economist, all the buy one, get one free or get one and half off. My dark chocolate, Lindt raised their price, but then immediately put it at like half off. I go to Walmart's and I can get this other brand, and it's $2, where the Lindt's, like, Lindt went up to $4, but the other one, Caravelli, I think, is still $3.50. But I go buy it at Walmart. It's $2 because I'm buying. I'm finding the best price, because that's what we do in an Austrian economic world. We look at substitute goods. We shop for better prices. That's what we do. So with that said, just because we're charging a tariff on the good, which is just an extra cost, I don't think it's a tax. You can call it a tax. It doesn't matter, but it's an extra 10 or 20% for you to sell us the good. That's it. So if it's steel, does GM pay more for the steel? GM doesn't pay the tariff. If it's coming from China, China pays the tariff on it. Now, does China mark it up? Well, they still got to pay 20%. So if they do, they still got to pay the tariff. If they say to GM, well, you got to pay the tariff, or we're not going to ship you the steel, then I would shop around. Does anybody else give me the steel? Then if you have to pay more, GM does not mean you can raise the price of the car, because that depends on the market. And the market says, I don't want to pay more, especially with high inflation. You can't afford the car in the first place because the interest rates are so high. And as I told you about Camry, so I go into the Toyota dealership. Again, I get free oil changes for football picks. And the guy then says, well, we marked up the Camry to 35,000, but I can't sell it. That's an example of the market saying, I don't care what your cost did because of inflation, I'm not going to buy it. At the end of the day, you have to sell it to the market, and the market is determined, the price is determined by the market. And as we just heard from Profit with Tesla, you've got to reach the market. So if GM or if Toyota thinks they're going to sell their Camry at 35 grand, they're in for a wide awakening. They can't. So they lowered their price back down, I think, to 26 or 27. And it was 24, 25. So it was a small increase. And then he started selling them again. So if you want to sell, here's your market. Here's your market. If you want to go up here, you're not going to sell it because there is no market up here. So you got to find your market, and that's what you can sell it at. So even though your cost went up, does not mean you can just, well, my cost went up 20%. I'm going to raise my price 20%. There's nobody home to sell it to them at the 20%. You still, how do you raise your market? And you can't. There's too much competition among cars. I can go buy a Corolla or a cheaper Camry, or I don't need one. 2018, I got a new Camry, and that's it. I'm not going to look for a new Camry every year. As my money needs to go for food and clothing and other things that have gone up in price. But even the food, I'm shopping around. Oh, steaks are $17. I'm not going to buy them. Oh, steaks on sale for $10. I'll buy it at that point. Or salmon, the same thing. Salmon, you see $20. I'm not buying it. Then all of a sudden it goes on sale for 10. Oh, okay, now I'll buy a few pounds. But I don't know if you can freeze salmon. That's the problem. So maybe you buy 2 pounds and cook it, and then, but otherwise I don't think you can freeze it. Maybe I'm wrong. I'm not sure. So that's what you have. The market, us, dictates the price you can charge us. Like I said, you make tuna $6 a can. Nobody's buying it. I was at Walmart Sunday, and tuna was the regular can, the 4-ounce can was $1.50. Normally it's $2.50. So I bought a bunch, and that's how you shop. When you see things on sale that you buy, the dark chocolate, the tuna, the Ken salad dressing, the spices, you buy, and you buy a bunch of it. So you don't have to keep rebuying. That was my point with Daria in Russia. She said prices are going up January 12th. So I gave her like $500. I said, go shopping for things that you can keep so you can buy them now. And then not when the prices go up, you'll be okay. So that's what you take advantage of. So when you do go to the grocery store, you buy the stuff on sale. Now, if you're unlimited, if you are wealthy and you have no issues with money and you're into gold because you realize your dollar is going out, unlike Warren Buffett, then you don't care about the prices. And that's fine. Most of us, however, do have a budget, do care, and we do shop because it's our money. If I save $300 at the grocery store in a month, that's a tenth of an ounce of gold I can buy, or 10 ounces of silver I can buy. That's how you got to look at it. And then when that runs up, you go, oh, good, I got another 10 ounces of silver that are now $500 an ounce because I was a smart shopper. So a tariff is an extra charge to the country sending us the goods. It's on China and it's on Mexico and Canada. It's not on us. So that is a tariff, and doesn't mean prices go up. It means the cost to them went up. Doesn't mean the cost to GM and Ford, if they're getting steel, went up. Well, I don't know. I mean, I don't not necessarily. If Canada wants to send steel, and what are you going to do? I mean, it doesn't mean GM's going to pay for the tariff or the extra costs, because GM's negotiating, saying, "Hey, we're going to pay you $100 a ton. You want to charge us $120 a ton?" No, we agreed to 100. And just because they maybe pay 120 doesn't mean they're going to pass it on to the consumer, because he doesn't. If he doesn't want to, it won't. If he's not willing to pay the extra, he won't. Just like the ribs for $45 versus 30. We don't want to, you can't pass it on if we're not going to pay $45 for ribs. And two of those, he had 3 restaurants. 2 of them have closed. I'm curious if they closed because they started to raise the price. I assume they were trapped where their costs went up, but they realized they couldn't raise their prices. Or they did raise their prices, but nobody, they raised the price, but nobody would pay $45 for ribs. The other problem is people having less money. I mean, people eating at the barbecue place, they're middle to high middle income people. It's a step up from McDonald's, who I would say are the low income people, and then the middle are the Coney Island people, and the barbecue are middle to higher middle. So they have money, but as groceries go up and as other costs go up, we're not getting the ribs tonight, or maybe we went every Friday. We're now going once a month, but the restaurant's in trouble. So they can't just raise their prices. So people who think just because costs go up, prices go up, have no concept of Austrian economics or economics at all. You must know the market is the one controlling everything. Us, we control what they can charge us. Because if we don't buy it, if we go to the grocery store and they want to have butter for $20 for the 4-pack, you say, fuck off. And if they can't move the butter, there goes Land O'Lakes, because Land O'Lakes can't charge. If Coca-Cola wants to sell their 2 liters for $10, say goodbye to Coke, because we'll buy Pepsi, or we'll buy 7-Up. We'll buy another product. We're not going to spend $10. And the other ones are smart enough. I just bought a 2-liter squirt, and it's $1. It was $1.95, and Coke's sitting there at $3. Well, fuck you, Coke. I'll buy. I don't care. I just want something, and it's not caffeine. So I try to stay away from caffeine and sugar. So I buy a lot of caffeine-free. If I do buy Coke or the Diet Squirt, which I know doesn't have caffeine, but I don't buy it much. It's just a treat. This week's my birthday. I think Friday I will go play poker and probably eat at the barbecue place, because it's on the way. You used to eat I used to get the buffet at the casino, and they don't have it anymore. So I don't eat at the casino. This is how stupid the casino is. You have a locked in audience. We're here to gamble. We're getting hungry. And then you make the prices so high. Well, fuck off. We're not idiots. We're losing money gambling. The last thing we want is to get killed on the food. So they take the buffet out. Dumbest decision they ever made. And the restaurants they have are terrible. So I'll stop at the barbecue place, and then I'll go play poker. What's the difference? So I'll probably do that Friday. And then if I win, I will then take all the money and buy silver with it on Saturday. That's my birthday present. Of course, there is going to be retaliatory tariffs coming from Canada, Mexico, and China as well, if we sell them any goods. Yes, I agree with you. And the EU as well. I'm not sure about the EU. We're not tariffing the EU. And that's going to destroy the economy if they do it also. The auto industry is really going to be affected from what I hear. Again, it won't be. Well, what'll happen is the cost for GM and Ford, let's say, Toyota, let's use that. The cost go up because of inflation in the first place. So I don't know that this tariff, do you get all the steel from Canada? I don't know. Um, China sells us goods. That's not a tariff. Well, yeah, that would be tariff, but China would pay the tariff. So if we want a phone, I got my phone, right? Does my phone go up because of tariffs? And if it does, I say fuck off, and I don't buy it. I'll buy another one. Again, they're smart enough to know they got to reach price points that the market will bear. So if you make a computer $5,000, nobody will buy it. If you make it 500, you'll get buyers. So you always have to meet the market. So just because, so is the industry, it's already affected, but all it'll mean is you're not going to sell any cars. So that's where the auto industry will get hurt by the higher price, the higher cost, and they can't pass on the cost to the you can't pass the cost on to the consumer because he's not going to pay 35,000 for a Camry. He'll pay 26. So if your cost went up and you need 35, you're not going to get it. So then you start limiting your cars, and then maybe you go out of business, and then there won't be cars to sell. I think there's always some cars to sell, and there's always something that you can get, but it'll hurt it. But there's always demand for cars in the U.S. because we don't have public transportation. In Europe, it's a lot of buses and trams. Switzerland, you don't even need a car. Vienna, you take a cab. Um, we went from our hotel downtown where all the action is, and it's probably a 15-minute walk. But if you took a cab, so the point is you can't pass the price on to the consumer if it's above what the consumer is willing to pay, what the market will bear. So what Trump's doing is saying, how do I pay for the $37 trillion debt? Well, I'll do tariffs. I'll charge the countries to bring in the goods, but he's not then getting the kickback. In other words, not the kickback, but the what do you call it? The setback of it. So in other words, well, I'll just rate everything will be even. I'll just tariff them 10%, and they'll have to pay the 10%. And I don't see any problem with that, except for does the buyer have to pay it or something, or do they add it to the cost? In other words, well, I'm going to charge you 100. Oh, I got this 10% tariffs 110, so I'm going to charge you 110 to cover the 10,000 now 11,000 in tariffs. So they make their selling price go up. And then either you buy it or you go substitute. Maybe you buy from China or Japan or Russia or another country that sells the goods you're buying, the steel you buy. Maybe you buy it from Japan. There's no tariffs. You're fine. That's how a smart company would do it. Where can I substitute? Can I not use steel? Well, I got to use steel. Okay. And that's the thing. So just to say that's it. So this is why you want free trade, because as we know, the way a market works is you sell, there's a market, what people will buy it for, and you sell it at that point. And when you do tariffs or taxes or anything, what happens, you're up here because now your costs are up. You sell it for more, but there's nobody home. The market's down here. So you always have to be at market. You cannot sell things higher than market and expect to sell anything. So that's your first thing. The second thing is the inflation is taking money out, as I showed you the grocery cart. $20 buys you 3 items. It used to fill it up. So I need more dollars to go eat and to buy clothes and to go to the restaurants. And so as your money loses value, that's really the key to the whole puzzle, is the inflation killing the money supply, making it worthless. Because it doesn't matter what happens. You're not getting rid of your $37 trillion debt. It's going to be 38 and 39 and 40 until the only way out is to collapse your dollar, which is already collapsed. It's already worthless. So don't think the dollar is worth anything. It's worthless. Egon says 99% gone. I say 100% gone. I don't know how you measure the 1%, but it's gone. And it's certainly gold. The gold price is going up, not the dollar going down, because the dollar's gone. The dollar's down. It's out. There is no more dollar to say that. People take it because they have to, because the government says you must take this Kroger's, you must take this Capital Grill. You have to take that. And they're in business. There's no other dollar they can use. I'm sure they'd love to take gold and silver. I know my barbecue place, the guy will take silver. I asked him, he told me, nah, no, I'll take silver. Because he knows it's worth a lot more than the $35 that it's out there. Like if I paid in silver, I would never ask for change. I mean, it's more of a little playful joke. I would pay him, maybe once I'll actually give him an ounce of silver, and that'll be it. Jenna's lucky. I gave her an ounce and a quarter of gold last time we met in Italy. She will then be very happy as gold's in the 2,900s. That's a lot of money in the Ukraine. So that'll buy her almost a year's worth of groceries, because I'd give her 300-400 a month, and now that would be times 12, 3,600. You're going to get 3,000 there, and then change it into Ukraine dollars. I told her, don't go to a pawn shop, go to a jewelry store when you go trade it in. But anyway, that's what tariffs are. They're just an extra cost, which fucks up this equilibrium, which now makes your cost higher than the market, which you can't do. So you got to keep your costs there. So you start laying off people like me, and then you end up going out of business, because again, the base of the business is, okay, what can I get for this in the market? I can get $50. Can I make it cheaper than the 50? So I can make 20%. So can I make it for $40? And if I can make it for 40, that's a 20% or 25% gross markup I can get on it. And again, but that covers all my costs. So $40 is my cost, utilities, plant, equipment, salaries, everything is $40 a bottle, but I got to sell so many bottles, and in the market I can get 50. So that's part one. If you can get all that. So when you get to part two, well, we're going to give you a tariff or a tax increase. Can I still get, okay, so my cost went from 40 to 42. Can I still sell it for 50? Yeah. But what the inflation hurts is I don't have $50 to buy it, because I had to pay for my food, which has gone up, and my clothes, which has gone up, my utilities, which has gone. So everything that's going up has taken away from from you buying that, having the 50 to buy it. That's most people, right? A big, 70, 80% of the people are, in making, under 100 grand. Then you have your one percenters who don't care, and that's the problem with people with the 500, 600 or $1 million in the 401k. They think, oh, I don't care if inflation hits. It won't affect me because the cost, I can cover a couple percent cost. But they don't realize their money's going to zero. And that's really what the problem is. So as we move it into gold, as we Rumpelstiltskin, as I love to say, as we move it in, we're protected. They're not. And just because you have money doesn't mean you're smart, Warren Buffett. I love how everybody thinks he's so smart because he's a billionaire. Well, he's a con man. He steals it from life insurance and insurances. They're all thieves. So therefore, I don't think he's smart. He just, what his dad put him into it or something. It's like Trump. I don't think he's smart. And all he did was take over his dad's business. So in a free market, if you add tariffs to it, does not necessarily mean the consumer is going to pay more, because the consumer is when I'm going to pay this. I'm going to pay 25,000 for a Camry. Well, we're going to market 35. I don't care. I'm not going to pay 35 for it. So you must meet market. And when your costs go up, does not mean you meet market. Now, I'm not sure what's happening here, because the tariff is not on the US firms. It is on Canadian, Mexico, and China. So they got to pay more. Does that mean they can charge us more? Not necessarily, not if we don't agree to it. If we can find steel somewhere else and not shop with Canada, not shop at the Canada restaurant, we find another restaurant. Maybe it's New Zealand, maybe it's Australia, maybe it's Singapore. There's other restaurants we can shop at and we can eat at, which is what generally will happen. We'll go to Norway and Sweden. All of a sudden, they'll start producing steel, and there's no tariff on it. That's what usually happens, right? They'll change something on the menu, or they'll change the name. So all of a sudden, Canada starts doing business with Sweden. And okay, we're going to ship our lumber to you, and there's no tariff, and then you ship it to the US, and there is no tariff on Sweden, so we keep our price. And that's probably what will happen, right? But the stock market's going to tank because earnings will drop because costs go up, or perceive to. I don't know if they can think like I do, but generally what should happen is Canada should sell to Sweden or Norway or Finland, let them sell to the US. There's no tariffs. We're all back to free trade. So that's the problem with Trump's, very poor thinking. Mexico, the same thing. They can sell it to Brazil, and Brazil can sell it to us, or another Latin American company, or sell it to Spain, and like they did with all the gold, and they'll sell it to us. So there's ways around these tariffs. So don't think that. However, the companies are still losing money because of the inflation. We have less